You know, we all get caught up in the annual scramble of filling out tax forms. But what if I told you the real action, the real story, isn't on the forms themselves? Nope. It's in this huge, invisible, data-driven system that's constantly watching, verifying, and enforcing the rules. Today, we're going to pull back that curtain and see how U.S. tax compliance really works and who the system is really watching. So let's start with a scene that I'm sure plays out in thousands of offices every single tax season. You've got a client, let's call him Mr. Samuels, sitting with his tax preparer. And the preparer is asking all these really specific personal questions, maybe about his son to see if he can get a tax credit. And Mr. Samuels just asks a question we've all thought, right? Do we really have to go through all this? It feels like a lot. And the preparer's answer is simple, direct, yes. But the reason why is everything. It's not just about being careful. It's a legal requirement, a professional mandate called due diligence. It's actually the preparer's job to ask all those questions to make sure everything is on the up and up. This one concept, honestly, is the key to this whole system. And look, this isn't some abstract idea from a textbook. It has very real consequences. And not just for you, the taxpayer, but for the professionals you trust with your finances. This gets really, really clear when a tax preparer gets the one phone call they absolutely dread, a call from the IRS. Now, you have to pay super close attention to the words the agent uses here. She doesn't say, "I'm examining your client's tax returns." She says, "I am examining your compliance." Whoa, that's not just a subtle difference in wording, it's a fundamental shift. All of a sudden, the spotlight isn't on the taxpayer, it's squarely on the professional who prepared the return. And this right here reveals a super important, kind of non-obvious detail about how the IRS polices this entire system. They're not just auditing the numbers on a form. They're auditing the process a professional used to get to those numbers. Did they ask the right questions? Did they write down the answers? Did they follow the rules of the road? That's what they're after. Okay, so if the IRS is auditing the process, then what does that process even look like? Well, professionals aren't just told to, do a good job. They are held to some very specific, legally defined standards. The absolute foundation of this whole thing is due diligence. It's the law that says preparers have to ask those probing questions, they have to verify that someone's actually eligible for credits, and they have to keep detailed records. But that brings up a really crucial question. How certain do they have to be? The answer is probably not what you think. It's not 100%. It's not even 51%. The professional standard they have to clear is something called reasonable basis. And this concept, reasonable basis, is pretty fascinating when you think about it. It means a preparer just needs to have a professionally defensible position with at least a 1 in 4 chance of holding up in a challenge. The system isn't demanding absolute certainty because tax law is complicated and full of gray areas. What it is demanding is a solid, well-reasoned argument. So if that's the standard for professionals, how does the IRS enforce it across millions and millions of returns? I mean, they don't have enough people to call every preparer. So instead, they rely on a massive, interconnected web of data. So the key mechanism here are these things called information returns. These are forms filed not by you, but by other people. Banks, credit card companies, your employer. They report payments they made to you, directly to the IRS. This lets their computers automatically cross-reference all that data with your tax return and flag any mismatches, often before a person ever even looks at it. And you can see this data web just getting bigger and bigger in real time. Look at the filing threshold for Form 1099-K. That's the one that reports payments from platforms like PayPal or Venmo. It's dropping steadily. And by 2026, any business income over just $600 from these platforms gets automatically reported to the IRS. That pulls millions more transactions right into their system. Okay, so with this level of automated oversight, the cause and effect here is pretty clear. When the system finds a mistake, the consequences are specific. They are costly, and boy, do they add up fast. Let's just look at how fast these penalties can escalate. Take just one form, the 1042S. If you file it a little bit late, the penalty is $50. Okay, but if you wait until after August 1st, that same penalty skyrockets to $290 per form. For a business filing hundreds of these, a little delay can suddenly become a massive expense. And it's not just about being late. You can get hit with penalties for filing with wrong information or for forgetting to send a copy to the person you paid. And what's even crazier is that a single form can get hit with multiple penalties. So it could be late and incorrect, and you're just compounding the financial risk for what seemed like a tiny little error. And beyond the money, there's this huge operational burden. Remember that call from Agent Sanchez? She wanted 25 client files. That means the preparer has to just stop everything they're doing, pull years of records for 24 clients, and get ready to defend their entire due diligence process for every single one. That's a serious disruption. So, okay, given the high stakes and how complex this all is, how can anybody, taxpayers and professionals, navigate this system correctly? Well, fortunately, the IRS and other agencies actually provide some pretty powerful tools, and a lot of them are free. The system itself actually gives you tools to help you navigate it. The IRS website has guides to help you prevent problems. If you do get into trouble, the Taxpayer Advocate Service is like having a champion on the inside. And to get ahead of the game, the IRS even gives away free software so you can check your data for errors before you even file. These aren't just resources, they're basically lifelines in a very complex system. And all of this leads us to one last big provocative thought. The system is clearly shifting toward more automation, more data matching, more algorithmic enforcement. As that trend picks up steam, what happens to the role of professional judgment, that reasonable basis standard we were just talking about? Does the art of interpretation and advocacy get replaced by the simple certainty of a machine that just says match or no match? That's a question that is absolutely going to define the future of tax compliance for every single one of us.